6.25% Federal Farm Credit Bank's agency bonds. Who are the Federal Farm Credit Banks, and why do they issue agency bonds? What safety, tax, and other important factors should you consider before purchasing these agency bonds? Hello, members and super savers. I hope you're healthy and having a good week. The Federal Farm Credit Bank's Funding Corporation, FFCB for short, is one of the largest agency bond issuers, one that appears often when you search for agency bonds on Fidelity, Schwab, and Vanguard. At the time of this taping, the FFCB has about $396 billion in total debt outstanding and approximately $155 billion in debt issuance so far this year. It's also one of the government-sponsored enterprises, GSEs, that has been paying the highest returns on their new issues recently. In fact, I know some of you in our community already own this 6.25% FFCB agency bond that we're referring to in the title of this video. So let's talk a bit more about the FFCB and answer these questions today. As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. In order to understand the Federal Farm Credit Bank's Funding Corporation, the FFCB, we first need to understand the National Farm Credit System, the FCS. The FCS was established through congressional legislation in 1916 to provide farmers and the agricultural sector with a source of stable and reliable credit. In fact, the FCS is the oldest American government-sponsored enterprise. While it was initially government-funded, the Farm Credit System, the FCS, is now member-owned and self-funded. And it's using the Federal Farm Credit Bank's Funding Corporation, the FFCB, you guessed it, to help raise the funding the system needs. So, here's the important role the FCS and FFCB play in our country's agricultural industry. On the very top, we have the Farm Credit System, the FCS. The Federal Farm Credit Bank's Funding Corporation, the FFCB, is the funding arm of the FCS. The FFCB issues agency bonds at a pre-specified coupon rate to institutional investors and to retail investors like you and me. And in exchange, we lend out our cash to the FFCB for their utilization. The FFCB takes the cash that we've lent them, that they've raised from issuing agency bonds, and then in a nutshell, through their 4 system banks here, work with other associations and cooperatives to make loans and extend credit to farmers and the general agricultural sector. The loans and credit allow farmers in the general agricultural sector to basically purchase land, buy equipment, carry out farming operations, and build out infrastructure in rural areas. Most banks tend to view lending to the agricultural industry as risky, as it can experience quite some ups and downs over time. And we don't need to think about the impact of the Great Depression on the rural Midwest here. Basically, every one of us experienced firsthand what can be rapid ups and downs of this sector with the recent extreme prices seen on eggs, dairy, and other food products. Farming is unpredictable by nature, and crop prices can be volatile. This, coupled with the fact that many rural areas lack regional or local banks from which farmers and the agricultural sector can borrow money, is what makes it so hard for those in that industry to obtain stable and reliable credit. In addition, because the FFCB, as a GSE, is able to go out to the capital markets to raise significant amounts of capital on a regular basis, this means that the FFCB is able to make loans and extend credit to smaller farmers and agricultural businesses at relatively reasonable interest rates, thus enabling smaller farmers and agricultural businesses, which otherwise may not have been able to borrow any money at all, to grow their operations. And that's why the FFCB's role is such a critical one for our economy. By providing loans and extending credit to farmers and farm-related businesses, big and small, the FFCB helps ensure a more stable agricultural industry, as well as helping to stabilize food prices in the long run in our country. Imagine how crazy food prices would fluctuate if farmers went bankrupt all the time or couldn't borrow on a regular, ongoing basis. So, stability in food prices and the agricultural industry is great. But from an investor perspective, how safe are the FFCB's agency bonds? And what else do you need to think about before possibly adding some to your portfolio? Many of the Diamond NestEgg regulars have already seen the Simplify Your Agency Bond Journey summary table that I created for one of our latest member videos on this topic. As you can see, the FFCB is implicitly backed by the US government. Implicit in this context means that it's universally understood that our government wouldn't let a GSE default on its obligations, even though it's not written directly in the law as it is for federal government agency bonds and US Treasuries. With this implicit government guarantee, FFCB bonds are regarded as very safe, albeit with slightly higher credit risk than Treasuries. But that should come as no surprise given that Treasuries are considered, for all practical purposes, to be free of credit risk, as they are explicitly backed by the full faith and credit of our government. In fact, FFCB bonds actually carry the same credit rating as US Treasuries, AAA by Moody's and AA plus by S&P. And they're insured through the Farm Credit System Insurance Corporation, FCSIC, a self-funded, independent, U.S. government-controlled corporation created to protect those of us who invest in agency debt from the FFCB. So, that was safety. Let's move on to taxes now. Again, as you can see from this table, interest earned on FFCB bonds is exempt from state and local taxes when held in a taxable brokerage account. In this respect, FFCB bonds are similar to US Treasuries. Here are some other important factors you should consider before purchasing these agency bonds, other than safety, credit risk, and taxation of interest earned. Callability. All the new issue agency bonds we've seen recently are callable, including those for the FFCB. So you'll need to be comfortable with this and the reinvestment risk that is typically associated with callable bonds if you move forward with adding FFCB bonds to your fixed income portfolio. Liquidity. Agency bonds tend to be less liquid than US Treasuries. Almost by definition, given that Treasuries are considered to be the most liquid fixed income investment across the industry worldwide. And FFCB bonds are no different. They're usually less liquid than US Treasuries, meaning that if you have to sell your FFCB bonds before maturity, you may have to wait a while to find a buyer and or accept a price that is not what you had expected. Minimum investment requirements. With Fidelity, the typical minimum purchase requirements that we've seen recently for new issue FFCB bonds has been $1,000 in additional increments of also $1,000. This may differ, however, depending on the broker you're with, as well as on whether you're buying a new issue FFCB bond or existing ones that are already trading on the secondary market. And there you have it, folks. Who are the federal farm credit banks and why do they issue agency bonds? And what safety, tax, and other important factors should you consider before purchasing these agency bonds? Now, if you're completely new to agency bonds, I highly recommend checking out these Agency Bond 101 videos first before moving forward with any agency bond purchase so that you fully understand what you're putting your money into. All right, members and super savers, as always, I hope you enjoyed this video and learned something new. And I would love to invite you to continue to support our channel through membership so that we can keep producing one-of-a-kind, unbiased, sponsorship-free videos for our super saving community. Get your top-of-mind questions answered in our next live member Q&A on August 25th at 5:30 p.m. Eastern Time. And check out our latest member videos on fixed income. Click the join button on our YouTube channel page or the link in the video description below for more details about Diamond NestEgg membership. And of course, don't forget to share this video with the fixed income fans you care about and hit the thumbs up, and see you again very soon with more brand new wealth building content for your financial journey.